Good morning, good morning, good morning. My name is Sean Dex and I welcome you back to the Mango Grow for your daily analysis video on Bitcoin and Chainlink. It's a beautiful, beautiful day outside and we have some interesting things to talk about today. Is Bitcoin finally getting ready to break through this resistance cluster over here? Are we headed all the way up to potentially 11,500 to 12,000, or are we going to see a rejection and head all the way down to the bottom of the channel over here to around 6,900 to 7,000? I'll be giving you guys my thoughts on that. I'll also be talking about the CMEs coming all the way down to 8,200, filling that gap. I want to share my thoughts on this as well, and we'll be talking about our beloved Chainlink USD. Where's Chainlink headed? To the upside or to the downside in this prolonged equilibrium over here, frustrating a lot of people, testing people's patience? Is Chainlink going to reward the hodlers, or is Chainlink looking to be punishing? I'll be talking about that as well today, so buckle up, pull out your jugs, and get ready for some mango morning juice. And here we have Bitcoin USD on the daily time frame, and as you guys can see, Bitcoin seems to be pressed down over here by this upper trend line. But again, guys, remember, trend lines, diagonal lines especially, are very, very subjective, right? So we need something more objective, and you guys know that I've been looking at the 12-hour 200 MA as our objective line of resistance. If TradingView does want to load it, go ahead, TradingView, do it anytime now. Did I even click that? Let me try again, and there we go. Okay, maybe I didn't click it. And as you can see, the Tenkin coming up there too. So we have the Tenkin resistance as well as the 200 MA resistance over price action. So us clearing this area over here, this resistance cluster on the 12-hour time frame, is going to be very, very key. Currently, Bitcoin sitting underneath the 12-hour cloud, sitting underneath the 12-hour Tenkin, as well as the 12-hour 200 MA. But the good news is that we are sitting underneath it, right? We are consolidating underneath that resistance. When you see consolidation, prolonged consolidation underneath without getting smacked down and seeing that rejection all the way down to perhaps the Kijun, that is a good sign, okay? It means that the bulls are trying to maintain that rising equilibrium underneath a major resistance line. So I would typically lean towards this breaking. All right, so that's what I'm looking at. Now again, on the 12-hour time frame, we'd be looking for a 12-hour open as well as a close. Okay, so I would be looking for two 12-hour candles to be living above this 200 MA on the 12-hour over here for me to be convinced. Now the reason I'll be looking for that is mostly because I'm already in position all the way from not 7,400. My average is around 7,600, 7,700, right? So I can afford to be a little bit more patient on terms of trying to get my entries in, and by that I'm referring to when I add to my position. Remember guys, I am treating this trade from here as a trend trade, okay? And as a trend trader, I'm looking to be adding to my position as we break major levels, and it's very, very similar to what we did at the 3.8k trade that we took, right? As we went up, we kept adding. Yes, we saw some resistance over here at the 5k zone, we saw some resistance at the 8k zone, but we added to our trades strategically and it panned out very, very well. Now again, everybody's trading personality is different. You may like to trade the ranges, you may like to trade for the smaller moves. Me on the other hand, I like going for the bigger moves, and the risk to reward ratio is just a lot better there for me. Of course though, you got to have a strategy in mind, you got to play it properly, you got to be careful, you got to have your risk management on point. More importantly, that is the biggest point, okay? You need to have your risk management on point. So I'll be looking to add to my position only after we break past this 9,600 zone over here, and I know some of you are looking to add to your position at the 9,450 break, and that's completely fine too. That does line up with the Tenkin as well. And if you go on over to the daily, okay, there are two major levels over here that you could be looking to add after a break, and that's essentially the 9,400 coming in at this resistance. That's actually 9,350-ish, but I see where you're getting 9,450 from. It's these candle closes over here, but again, I'm taking the safer route. Why? Because hey, I already have a position from here, right? And I added on this zone over here too when we came, and I wasn't actually looking to add because I was already very well positioned, and I'm slightly over positioned now, to be honest, but I'm okay with that position. This was just way too good of a position to not add. Okay, we had the weekly test of the 21 EMA, the 3-day 21 EMA was there at the time, the 4-day 21 EMA was there, as well as the 10 SMA, as well as the 4. It was a way too good to not add, and it did play out well. And I do want to talk about this because this leads us very well into our next conversation on BTC CMEs, right? The big CME gap fill. So a few people messaged me around this time, and they were asking me whether they should be looking to enter over here. Okay, for everybody who missed their positions around here, a good spot to have entered and tried to get in on this potential trend trade was around 8,900. Okay, now the key word over there, guys, is potential trend trade. We don't know if this trend trade is going to work out or not, okay? And that's the entire game when it comes to trend trading. There's a lot of frustration, there's a lot of patience required, but the wins are massive. That being said, going back to what I was talking about, at around 8,950-ish, people decided not to enter. Okay, people I was talking to decided not to enter. Why? Because they were waiting for the CME gap fill instead. And my thoughts were, hey, we just pumped around 45%. Okay, yeah, 40%, out of which we gave back a good 15%, 13 to 15%. Now you're telling me that to enter this trend trade, you are going to wait for around a 2% to 2.5% move. Isn't 13% good enough? Okay. I get that, hey, the CME gap fill is very likely to happen because it seems to have happened often in the past, but is it worth it? You guys always, as a trader, you always need to ask yourselves the opportunity cost that you're leaving on the table in case it does not come and fill the gap. And think back to everybody waiting to come and waiting for the CME gap to be filled over here, right? It was around 8,500. Yeah, I remember us talking about it. We talked about how it may never get filled for a very long time, and even if it does come and get filled, everybody, all the anxious, all the overconfident CME gap fill players or buyers are going to have their bids there, and what happens, we come and blow right past it. We were talking about it all the way over here, and guess what, guys, when we finally did come and fill that CME gap, that's exactly what we did, right? People had their bids over here. In fact, somebody sent me a YouTube video of a trader who said, hey, I'm putting a bid right over there, and that's fine, but I hope he had his risk management in place, because look at what happened. We blew right past it, right? We went all the way down to 7,967. And yeah, all the CME gap fill players over here, they either held their trades or they had to take a severe loss. And if they held their trades, good for them, man, because that took a lot of courage. I don't think I would have held that, to be honest, but that's why I trade my risk. My entire trading personality is geared towards my risk management, or should I say the other way around. I strategized my risk management to fit my trading personality. Okay, yeah, that's a better way of putting it. Okay, so going back to what I was saying, the CME gap fill. Okay, the CME gap fill. It could or could not have come. And at 8,900, I thought it was better to just take the trade over here, which is why I did. And now guess what, guys? We filled that CME gap. It was yesterday around in the afternoon my time. Right there, we got the CME gap fill, and again we slipped right past it. And this is a little bit questionable. I would not have expected something like this to happen on CMEs, but hey, it did. And look at the buyback. Okay, to me this is bullish. This is bullish because of two things. One, this wick over here shows a lot of buy pressure coming in from the underneath, and it was sustained, right? We did not see a sell-off right after. We saw the buyback almost instantaneously, and it got held. Number two, we did not see the reaction, the equal reaction on the spot charts. So everybody who's watching the CMEs, hoping to get that reaction on the spot charts, they were just left where's my bid? They didn't get filled on their positions at all, and what's more is they missed their position, their golden opportunity to buy at the 8,900. Now I don't want to sound like one of those traders who say, hey, last chance to buy it around 8,900. No, we could very well come down all the way down to 8,500 like we discussed yesterday, but again, as a trader, you take it one step at a time, and until we break certain levels over here, mainly the 9,000 level, okay, until we close at least 2 4-hour candles or a 12-hour candle underneath 9,000, the probability of us coming down to around 8,500, even all the way down to 8,200, is far less than the probability of us testing the 9,600 region again and smashing right through it. Okay, again, as a trader, you need to think about the long term, and for long term success, you need to take the high probability plays that combine with the magnitude of your wins. If you find yourself in a situation where you are personalizing each trade, where you're looking for an outcome on each trade, you are doing it wrong. Okay, you could have a string of 3 to 5 losses and still be doing it right. Why? Because in the long term, the trading strategy that you're following, the system, the rules that you're setting for yourself has long-term sustainability. Be very careful, guys. Be very careful following somebody else who just is looking to win on every single trade. Okay, in the long term, those guys looking for those big moon wins, they end up in a lot of trouble. Okay, be very careful. I don't want to put anybody down, any other YouTuber or anything like that. I don't mean to do that. I don't even watch any other YouTuber. I used to. I don't have any time anymore. But all I'm saying is be very careful, because my job over here is to protect my community, and I want you guys to always risk manage first. Alright, so enough of that rant. Let's talk about what's going on over here with Bitcoin. We have 3 scenarios that could take place. We could either smash through this 9,600 resistance, we could simply go sideways and frustrate a lot of people, or we could get a massive rejection and head all the way down to the bottom of this potential channel, step by step, of course, all the way down to 6,800. So let's talk about the first bullish scenario. All right, the bullish scenario is that we are in a bull flag over here, right? This looks like a massive bull flag. If you look at the higher time frames, you can go ahead and look at the weekly. Do I have it drawn? Yep, I do have it drawn. So this could be considered a bull flag that might break to the upside. If we do break this to the upside, we talked about this before. I'll go ahead and do it again. You could do a measured move using this as the pole. And the breakout, let's say we have the breakout from somewhere around here, is coming up to exactly around 9,800, which lines up very well with the wick as well as the candle close around 19,500ish. So that's really interesting that the break of this bull flag, potential bull flag, points us up to our all-time highs. But again, do we just shoot right up there with one candle? No, very unlikely. We have to take it one step at a time. Let's go ahead and plot out some horizontals on the weekly time frame, and again, we can just go ahead and look at everything. What we have one right over here, and as you can see, Bitcoin did come and test it, right? Did we almost got there all the way up to on this massive 42% pump. You can see kind of got front run. Let me zoom in for you guys. Kind of got front run, but hey, that's really good enough when we're talking with the higher time frames. Does line up with these guys over here as well. Let me go ahead and adjust it just a little bit. Okay, yeah, that's good enough for me. We also do have a level right over here, 11,600, matching up with these guys over here. This is going to be a very key area, by the way. This is going to be a very key area. For those of you who have been watching the Mango Seed program and have been going through the modules, you guys know why this is going to be very key. Okay, if you have watched all the modules so far, okay, watch all the modules so far. You do not need to watch the most recent module on trend analysis to understand why, but I hope you guys are keeping up, man. I know the markets have been down, but that's exactly when you need to be using that time to improve as a trader. All right, similar to this bear market over here, right? Everybody disappeared, and what happened right after? The traders who stuck with it, improved their trading, they were rewarded. Okay, now the question is, do you guys want to be like the rest of the herd, or do you guys want to be one of the few, the 1% they say that actually you win in this game? It's staggering to actually believe that so few win, but then when you anyways, I'll rant some other time. Okay, but again, like I said, we have to take this one step at a time, and the first key level for us to break is 9,600. If we break 9,600, I think the next major level will be 10,400, but we won't be stopping there for too long, in my opinion. I think we're gonna make our way up to 11,500. I really do think that, but again, that might be my bias kicking in. That's what my thoughts are. Is that how I trade it? Again, it's a trend trade, right? So I'll be taking it one step at a time and looking to add at major levels and see how price reaction how price reacts to those major levels, and see if the trend is still intact. Again, we don't have to break through this. We could get that rejection. Let's go back on over to the daily time frame and get things back into equilibrium. If we see that rejection over here, you guys are seeing this channel, right? We could very likely come all the way back to the bottom of this channel at around 7,000ish, 6,900. Now again, do we see a big red candle all the way to the bottom? To be honest, I would say that that's more likely than us seeing one big green candle to 11,500. Okay, it's more likely that we do see a big red candle to the bottom. So be careful with that if you are in a bullish position. I know that sounds a little scary, but just be careful. Now, I don't think that is going to happen, but it's just more likely than the bullish candle. Okay, I think it is more likely that we stop at major levels. The first major level is the top of the range that we talked about during this consolidation, which is around 8,600. okay, we see a starter step over there, and then we come down to around 8,500ish, no, 8,200, which would be the middle of the range, and then to 7,700. And then if you're seeing even further reaction on the movement towards the downside, I think we would come all the way down to around 6,900 or 7,000. I think 6,900. That does line up with our monthly levels as well. And here we have the monthly, and you can see that this orange EMA here, the 26 EMA, is coming in around 6,800ish to round it off. But I want you guys to look at this cluster over here. Okay, the 12 EMA as well as the 10 SMA. Both of them are clustering in at around 8,000. And historically, Bitcoin has found support on those levels over there, and some really good support. And every time we've tested that, okay, we've tested that once and had a very nice run to the upside over here. That was a good 100% move. Then after that, we came and tested again and just mooned, right? This was when we had a massive run to 20,000. That was a 4,200% move, guys. So am I saying we're going to do something like that again? No, but I hope so. It would be awesome. But I just want you guys to keep that in mind. So we covered both scenarios, to the upside and to the downside, but there is one more scenario that you guys should not neglect, and I think this is where people, oh, by the way guys, the thing I was looking for this morning was for Bitcoin to defend the 10 SMA on the daily time frame, and as you can see, we have defended it again. Yes, we've had a few scares over the past couple of days, but we retook it, we defended it, and we defended it again today, right? So it'll be interesting to see whether this can hold Bitcoin up over here and actually be the propellant to make Bitcoin break past that 9,600 level. Okay, so going back to what we were talking about, we were talking about this potential bullish channel over here. But again, remember guys, subjective trend lines. That being said, we have three scenarios. We talked about the upside, breaking to the upside. We talked about coming all the way to the downside of this channel over here as well. And if we do break the channel to the downside, we'll talk about it when we get there. But the third scenario is that we simply go sideways, and people, this is where people get wrong. Okay, this is where people get wrong, in that they get frustrated waiting for Bitcoin and they get shook out in the small range. Okay, playing levels between 9,000 and 9,200, 9,200 and 9,400, when Bitcoin has clearly told us with this massive move of a monthly level. Okay, this move over here was a defense of the weekly as well as a monthly level. The bulls have told us that they are not interested in playing the smaller time frames, not just yet. Okay, and if you get caught in trying to play the bull bear battle on the lower time frames, you are playing with the probability not on your side. The bulls are putting the probability on your side on the higher time frames. That's how I look at it. As a trader, as someone who does this for a living, I need to concern myself with long-term sustainability, and I need the probability long-term on my side. All right, so a very good possibility is that we simply go sideways and then we make our big move to the upside or to the downside, right? If we actually start consolidating to the sideways, I think the probability would lean more towards the upside. Now, I want you guys to draw your attention to this area over here. After we had that massive move, okay, all the way from around 3,800, this was another 30% bump, okay, that we went to the 5k level, and what did we do right after? We consolidated sideways for 1, 2, 3, 4 weeks before we had our next leg up. Okay, 4 weeks. Okay, are you guys forgetting that? I think a lot of people are forgetting that. So Bitcoin could drive your patience, and you need to be okay with that, because in terms of the chart, 4 weeks is simply 4 candles. If you were playing the 1 hour time frame, you'd wait 4 candles, no problem, right? Because hey, that's 4 hours, but that's still 4 candles. So if you do want the big wins that come from the bigger time frames, you gotta be patient, is what I am trying to say. Alright, so now we can look at Chainlink. We're looking at Chainlink USD on the 2-day time frame. Let's go ahead and turn on our horizontals, and we were looking at this ascending triangle, right? And we were talking about whether it could break to the upside or to the downside. If it breaks to the downside, we're looking at a measured move pointing all the way us down to the $2 mark. That won't be the prettiest, because we'll be taking out this low over here as well. Not good at all. But if we do break to the upside, we're looking at around the $3.45 mark, $3.50 to round it off. Now, I do think I adjusted this line over here, okay, this trend line over here, because I think we were at the bottom of the trend line. This is on the 2-day time frame, so I'm forgetting. This is why I recommend using something a little bit more objective, and use your diagonal trend lines that you draw as a secondary tool, if not a tertiary tool. Okay, so something more objective would be the mango ribbon, and we can go ahead and look at what we have going on over here. And okay, the 10 SMA is holding price action up. We are seeing support over there. We are closing a 2-day tomorrow, so a brand new 2-day will start tomorrow. It'll be interesting to see if Chainlink can actually hold this 10 SMA. I'll be looking and hoping for it to pop up all the way up to the $2.85 mark and have some consolidation near this level here, the top of the triangle. If we do that, it'll be more likely that we're breaking to the upside. Okay, we do have the 21 EMA on the 2-day that is coming in and lining with the key $2.50 mark. So tomorrow will be very key when we open a brand new 2-day. I'll be looking for the 10 SMA to be defended, and I'll be looking to see this 21 EMA come and line up somewhere around here. Okay, let's go ahead and see what's going on the daily time frame. We are underneath the 10kin, we are underneath the 10 SMA, a wick down to the $2.60 mark, and a defense of this trend line. Won't be surprised. But again, my trend line over here is a subjective trend line. We don't have to defend it at all. Okay, but what I would be looking for, okay, through a more objective perspective, is a candle close above the 21 EMA. Okay, that's what we're looking for. A candle close above the 21 EMA for sure. We do not want to be losing that, because if we do, I'm definitely looking for that move all the way down to the Kijun $2.26. Okay, that's what I'd be eyeing. If we're not looking at our mango ribbon, let's go ahead and clear everything out. I'm looking for a defense of a wick of $2.50, at the very least a defense of $2.40. Okay, these are our 2 support levels. Let me adjust that a little bit over there. Let's go ahead and draw something. Okay, so that's what I'll be looking for. These are the key levels that we're looking for Chainlink USD to defend on the daily time frame. If we don't, flushing all the way down to $2, and that would make us put in a low at the $2 mark on the weekly time frame. Then I'll be looking for Chainlink. Yes, it's going to take a longer time. We're going to be patient, because we're going to be looking at the weekly time frame, but then I'll be looking for Chainlink to establish a higher low, but of course before that a lower high, higher low, higher high, and then lower high, and then we can go ahead and think about breaking the $2.77 mark again. If I did confuse you over there, don't worry about it. Simply look at the daily time frame. Okay, turn on your mango ribbon and wait for the daily 21 EMA to be broken. If we lose the daily 21 EMA, then we can look towards the Kijun. If we lose that as well, we can look at the $2 mark. Keep it simple, keep it the mango way, keep it the stress-free way. Okay, so that's pretty much it, guys. Chainlink has been going sideways, so there's not much really to talk about. It is in an equilibrium state. We can turn on our Ichimoku, and you'll see the cloud should be green still. Go ahead, TradingView is taking its time today, so I'm gonna have to leave you guys at that. But yeah, again, guys, do the mango way, do it the stress-free way. Things will get interesting very, very soon. Like I said in yesterday's video, this is the calm before the storm. So throw a like, throw a subscribe. I'll see you guys in tomorrow.